also welcome on board Gurmeet Chadda and find out what he's making of the market right now. Gurmeet, hi, good morning. Pretty range bound the market, but off late, the FI selling as well is getting a little bit larger. While sure there is DII support, and the Nifty range as well is getting lower and lower by the day. What do you think is the worry point for the market?
Hi, good morning. Always good to connect. I shall see three, four things I think is worrying the market. One is this uncertainty. Market can price in risk. So if the event is over, be able to price in. I think this tariff deadline is something which is now weighing on the market because since July first week, we've been hearing that we'll have an interim deal. Then there is a news that there will be no deal. We'll have tariffs, and the comprehensive deal will happen somewhere in September, October. So there's a bit of an uncertainty there. That's why the export sensitive sectors have been underperforming the market, whether it is auto, whether it is textiles, whether it is anything which is more global supply chain facing, especially US facing, is underperforming. Secondly, we've seen other countries get some deals, which is let's say Japan, China. There's a bit of a pause. Then there was deal with Indonesia, which also means that the tactical money, the short-term money keeps hopping from one emerging market to the other, or some other markets where trade deals are happening. So that there's a bit of a tactical move here. So I don't think so we should read much into too much FI sell-off because that's happened mostly after the trade deals got started. And then you have been earnings have been very, very soft, which was expected. But let's say, for example, Kotak was disappointing because the Q1 update was very, very good. IT companies are actually the commentary has been slightly much weaker than what market thought it would be, and the news of layoff obviously didn't help matters. So it's a combination of all these factors, and I think next few days, to my mind, are important from a direction point of view. You have a Fed FOMC meet rate cut decision today. You have the big tech earnings in US, and then you have the 1st August, tariff line. So too many things happening. But the good part is, as I said, it's largely been range bound. It's not that you are seeing very large. So wherever the numbers are coming good, wherever the news is positive, market is also rewarding it.
Yeah, it is. And look at L&T, another strong quarter in terms of the order inflows for them. Revenues have been consistent, margins in line with last year. And more importantly, I think the commentary, Gurmeet, that from L&T, which is pretty much a company that gives you a color on which way the economy is headed, was quite the heartening sign. And rightfully so, you're finally seeing that meaningful move on L&T.
Yeah, long view, Asha. And this is one stock which hasn't really participated the way it does, in larger bull runs. I think what I liked about L&T, other than the order book, because order book has always been strong, is the good execution. And if you see the net working capital, that's finally come down to 10.1%. That was their aspiration now for last 4 or 5 years when they launched their project called Lakshya, which was the 5-year plan. So I think net working capital coming down more than 300 basis points, extremely heartening. Also, the Middle East orders, I think, will surprise on the upside. They will get some very large orders from Middle East across the spectrum, hydrocarbon, water, the way things are turning around there. And then you have the GCC related tailwind for them. The only thing I would want to see is if you see the order mix, government is still 75, private is 25. And I would want private ratio to improve for to have, let's say, a very meaningful, run in L&T over a period.
Oh, we seem to be getting, yeah, snapping that line with Gurmeet. Just going to get back to him. Okay, I think Gurmeet is already back. Yes, Gurmeet, you were making your point on L&T.
Yeah, sorry for the bad line. I think the private sector book once it picks up, I think that will probably you'll see a bigger re-rating, and I think L&T has a lot of value unlocking to happen at some point of time. We will see that over the next couple of years. So it's part of our core portfolio and probably one of the stronger large cap which should do well over the next 2 3 years.
Okay, so that's the take on L&T. But Gurmeet, if you take a look at the earnings scorecards so far, 28 out of the Nifty 50 companies have come out with their numbers, with 7 of them being below and only 6 being a beat versus estimates so far. What's your broad sense on the earnings season we've seen, and what's the outlook for the remainder of it?
So that is where, as you rightly pointed out, the bigger concern is, FI flows will come and go. But if you see the peg right now, if you are 21 times earnings and if the earning growth is 7, you are around 3 times PEG. And I think that is expensive. I don't think so FIs will allocate money there. So I think once we'll probably see 12% kind of an earning growth, 13% kind of an earning growth, that's when it drops below 2. Even price book is above 3, which is also slightly on the higher side. I think once you see meaningful changes there, I think then that's when you'll have a sustained rally. Otherwise, news on tariffs and some decisions here and there, some global here and there, can at best be 5%. For a sustained up move to break out, let's say, the previous high, we need good earnings growth. And that's why I'm saying this is a tougher year. And it's very, very important to have the right balance, in terms of your asset allocation. The focus has to be more preservation right now. Get into good stock where earnings are strong. Don't overpay, and keep looking at other avenues. Like gold, precious metals, commodities, even fixed income. You will see US also starting to cut rates. I think there is more movement happening in terms of bond yields, and I think even long dated bonds can give good returns. So be more balanced, and at the same time, when you're doing stock picking, be anchored to where earnings are extremely, extremely strong.
Right. Gurmeet, that's the most cautious I've ever heard you. You're actually talking about other asset classes, diversification.